Alright everyone, welcome back to a new video. Now in this very quick video, I will show you a simple way for you to get a better entry for your trades. Now just remember that this is not trading advice, and also what I show you in this video is not going to work as a trading strategy. So you have to have some other way of knowing what trades you should take and when. Now with that being said, let's get right to it. And we'll be looking at this region here. And I know you can't see the date, but it is the 24th of November. So 2 days ago. So in this case, you would have to have a bullish bias for this to work. And basically what we're going to talk about is price establishing a level. Now, we can quite clearly see here that the first time the price drops down, price establishes a level, and the second time price drops again to the same place, this will be your entry. So you have your bullish bias for this day and you're looking to buy the market, but you're not quite sure when you should do that. So, let's say you are here, okay? I would always say that it's better to wait for the pullback to happen before you execute your trade, just in case, okay? Sometimes you miss a trade, but I honestly think that it's better to miss a trade than to get a very bad entry. So, you wait for the pullback to happen, right? Price comes back up and you start to see price coming down again to the same level. This is where you take your entry. This is where price established a level which you're going to utilize for your entry. And that way you get the perfect entry every time. So sometimes what tends to happen is when you take your trade, price starts to go through the level, right? But in these cases, you really shouldn't panic as long as your trading strategy and your market analysis for that day is very solid. So if you trust your analysis and your strategy, you might take the L on that trade, right? You might get stopped out, or you might want to exit early, but as soon as price starts heading upwards again, you want to re-enter immediately, okay? It simply means that price wanted to pull back slightly lower than the previous level, and this happens very often. So now I want to show you what this looks like with candlestick charts, since this is typically how traders look at price. So here we have 3 different candlestick charts side by side, and these are showing exactly the same price action. And this here on the right one is a 1 minute candlestick chart, and we can see price establishes the area here. We come back to the retest, go upwards. That's your entry right there. Same thing happens on the range chart. This is a 12 tick range chart. Same thing happens here. And this is a volume-based chart, 5,000 volume per candlestick. Same thing happens again. So even if you're using candlestick charts, volume, range, time-based charts, you can still use this pullback technique for your trades. Now that was it for this video. Make sure to join my free Discord. The link is in the comment section below. Thanks for watching.